The numbers are out. 2370 versus our estimates of 2378. So they've come in pretty much bang in line with what we were estimating. The poll suggested 2378 if I'm not wrong. So yes, I don't think there's too much of deviation on the Q2 patch. No surprises on that front. We'll wait for...
The rupee revenue is out, Neeraj, and that has come in at 9,858 crore rupees as well. Versus the ET Now poll, let's just bring up the rupee revenue for 9897 is what we had expected. So that's largely in line, you'd have to say. 9858 and versus the ET Now poll of 9897, that is largely in line. That is what the rupee revenue is. 2370 versus the ET Now poll of 2378 for the net profit. Again, that seems like an in-line number. But let's just wait out and see what the other figures actually entail. As of now, the numbers look just about in line.
15 rupees dividend is what the company is given out. The commentary coming in by Infosys on the new clients that they've added. So 39 new clients that they've added. But yeah, Aisha is right. I think the dollar EPS lowering, and if you just keep it at the average of 54, that's not too great. In fact, the Infosys commentary coming in saying that they have raised the wages now. Whether that means that it has been raised in the current quarter, that is the October to December quarter, or whether that impact has already been factored in the quarter gone by remains to be seen. But FY13 sales growth at 17.3% in rupee terms. They cut the FY13 forecast for earnings and ADR on forex volatility. Again, well, I wouldn't be surprised that they have cut those ADR forecasts because of what the rupee has done. Remember, Infosys doesn't hedge as much as some of the others do, but prima facie, maybe just a couple of disappointments. So a bit of a mixed bag. Let's just get in Sunita, who's got this initial take on what Infosys has dished out. Sunita, so I was looking at your estimates closely. They've pretty much come bang on in line with what the poll had suggested, but they've lowered the dollar EPS marginally. Mixed bag, you would say? How would you analyze it?
It is a mixed bag. As far as dollar revenue is concerned, it's slightly lower than what we were expecting. They've done about 1797 when we were expecting over $1,800 million. So growth as far as in dollar terms is concerned has come slightly lower than what we were expecting. So clearly the volume growth has not been as good as we were expecting them after the low base that they hit post the two disappointing quarters they had done. EBIT margins have come substantially under pressure. They have come at 26.34%. Remember, we were expecting roughly about 80 basis point improvement in the margins because the visa costs were not expected to be there. Also, the reversal in revenue that we saw in June quarter would be absent in this quarter. So it was expected to improve. So that has come under pressure. We need to watch out whether they've already incorporated the salary hike that they've announced in this quarter, whether a partial 1 month or anything has been included, that we need to watch out for. Also, if there is any pricing pressure they're seeing, that could be one of the reasons if the margins have come under pressure. EPS guidance that they've lowered for full year is much lower than what we were expecting. Analysts were expecting anywhere between 163 to 164. They've lowered to 160 rupees. So that's much sharper than what we were expecting. That could also be because the margins are now expected to be much lower than what earlier was expected. So that's another reason that we need to watch out for and need to know from the management what they feel the margin trajectory is going to be going forward. But as far as top line bottom line number in rupee terms is concerned, is bang on target. We were expecting 2378 crore rupees, that they've done 2370 rupees, so that's more or less in line with expectations. Salary hike was expected by most of the analysts. They have announced a salary hike. We need to see how much the pressure will come on the margins. Remember, the margins have already come down to 26.3% in this quarter, so whether they can improve it in Q4 after the Q3 takes a hit of salary hike, these are the factors that we need to watch out for. And also, remember, the analysts were expecting the growth will be some more or less back-ended in FY13, so we need to watch out from the management commentary whether the deal they have signed in Q2 will lead to that kind of back-ended growth, or will there be a pricing pressure, which most of the analysts are now talking about. Could that derail the growth going forward? At the moment, they've retained the 5%, at least 5% growth in dollar revenue terms as far as FY13 is concerned. But we need to watch out for the management body language, whether they're turning positive or it still continues to be as pessimistic as it was in previous quarter.